Hello everyone, welcome to Hot Forex Market Review for US session on January 9th. So, it was a BOC and Fed day today. We have just seen Bank of Canada leaving unchanged as expected, of course, the rates up to 1.75%. That was in line with expectations, the wide expectations, and as Bank of Canada repeated the last policy announcements and is likely to repeat on the afternoon press conference, the drop of oil prices is what is actually the main driver of this decision, and because it has actually a material effect in Bank of Canada outlook and in general the Canadian economy. This along with also some weak data and a weaker in general housing industry in Canada, along with a weak trade balance that was seen yesterday, is what actually driver Bank of Canada leaving the rates unchanged and not proceeding to a further rate hike. So we have seen, as I just mentioned, yesterday's exports slightly falling in November's exports actually slightly lower than expected. So we have an indication of a slowing economic growth, and that along with the housing starts earlier today, which spike higher than expected at 214K. However, they revised lower than last month, than in November. So weaker housing activity and consumption, along with the oil drop, is what actually had either were the main driver of this decision and the unchanged 1.75% rate for Bank of Canada. So on this announcement, and as we expect a press conference in an hour, if I'm not wrong, we have seen dollar yen breaking the second support of the day, and moving up to, let me put that on, 131.79. That is just 19 pips above the next resistance, which was at 131.60. So we're seeing, let me put that on, 131.60 is the next support, the next immediate support actually, which was seen at the end of November. So we are clearly in a sharp downtrend, and nothing is pointing to the upside. That's on the daily picture. So the next long-term support stands at 200 moving average. Let's see what's a simple one. 131 round level, and 200 is at 130.70. So the next immediate support, as I already told you, is back on November, 131.60, and the long term ones, if it continues to the downside, is at the around 131 level and 130.70, which is the 200 moving average. That was so far for Loonie. You see, it's a big candle on the announcement. We anticipate the press conference in an hour, so this is likely to remain volatile. For US oil, So despite the sharp decline we have seen for the last 3 months, we are facing so far this year a reversal of this downtrend. So significantly today, US oil break 51 barrier. So as I have posted a US oil post earlier today, like in the morning, a break of the around 52 level, which is also the third resistance for the day, might suggest a move up to 33. It was November's and December's resistance, and around 43 to 54.60. On the break, on the closing above 52 barrier, above this third resistance for the day, we might see a retest of this barrier, which was a strong resistance area back in November, December. Also, why I mentioned these levels is because significantly a break and a closing above the 52, it means that we will have a confirmed move above the 23.6% retracement on this sharp drop we've seen for 3 months. So that's quite significant. So something to add in your watch list, let's say. So still strong, keeping a floor over here at 50.75 level, remains to the upside. So steam, it doesn't look overbought yet, so further to the upside it seems. So that was regarding Bank of Canada. However, we have seen a significant weakness in dollars so far today, and that was mainly on some comments of Fed Bostic, which actually emphasize that we might have a sideline shift for the policy. So that means that we might not see any change during 2019 on the monetary policy, not further tightening in the policy if you prefer. So by his comments, like he said actually that US interest rates could go up or down. So he emphasized that Fed should wait and see how the economy develops before doing anything. So these comments are a clear sign that Fed is like in a clear shift to the sidelines mode, let's say. If you see that weakens dollar, spike euro dollar up to 115.40 area, the third resistance for the day. That's quite significant because it break this range in the daily chart, this range, this more than 3 months range ranking market. So it spike up to 55's high. The next immediate support stands on the 1550, just 15 minutes higher, or if you prefer on the 200 moving average, 115.80. Okay, so on today's closing we might have an indication regarding euro dollar's direction. So that was all from me. Thank you for watching. Have a safe trading for the rest of the day, and see you soon. See you tomorrow actually. Bye bye.